what is slow in this industry, it's the ability of giants to adapt to the changes, right? So big companies or big ships are hard to steer. It's not because they're not smart or not agile. It's because there's tons of regulation. There are legacy systems that you have to deal with. We make it easy for banks to engage with their customers at the point of purchase through embedded offers.
And also working in this industry that is fast moving but the big players are slow moving. How does that all of that impact you as a founder of a startup? Hi everyone, welcome back to the Beyond Product podcast. My name is Moshe Mikanovsky and I'm your host. How do you stay on the course of solving a real problem in a slow moving industry while your startup needs to be really fast? And on top of that, while you're moving to another country? This is a challenge we'll tackle today on the show. Our guest today is doing just that in the slow moving payment cards industry. I'm happy to have with me Oz Azaria, CEO and co founder of Hoox. Before founding Hoox, he was the director of business development at MasterCard and Max, formerly Leumi Card. Hoox is a customer activation platform for financial service providers, helping banks and card issuers engage with their customers in order to gain top of wallet. They offer a SaaS platform for issuers to target their customers outside of their network by offering dynamic, personalized, real-time, and measurable incentives that actually works. Welcome to the podcast, Oz.
It's pleasure to be here, Moshe, and I'm excited to be a guest at your podcast. It's actually my first time participating in a podcast, and a great honor. So thank you very much for having me.
Oh, amazing! I'm really happy that I'm initiating you into the podcast world because I'm sure that it's a great world out there for any founder, and you should really use that because there is a lot of podcasts out there and a lot of people that are looking for to listen to people like you.
So let's have fun, and that will give me some more energies to do more.
Amazing, amazing. I do remember my first podcast and that I was a guest. So I will try to be easy on you. So, first, I want you to introduce yourself, a bit about your background, and how did you get to where you are today to found a startup?
Right. So I'm I wouldn't say veteran, but I have experience in the payments industry. As you mentioned, my previous role before Hooks was a business development director at MasterCard in the Israeli office, covering all kinds of digital products, penetrating with them to new markets and trying to get competitive advantage over other networks. And before that, I worked for an Israeli issuer and a processor. Back then, the name was Leumi Card. Today, the name is Max, one of the biggest in the Israeli market. So I had 10 years of experience before initiating Hooks or establishing Hooks. And Hooks is a result of the experience that I had at MasterCard and Leumi Card. And I think I came to a point in which it was stronger than me. So I had the entrepreneurial virus in me long ago, but I think it's also a matter of timing in my personal life and also the courage to take such a journey because it is a journey. It's a journey that includes sacrifice, and I guess some of it will cover in the podcast. But it's an exciting one. I'm thrilled to be in this journey, and I'm thankful for my past background that gave me the tools to deal with all that is to deal with in this journey.
Yeah, absolutely. I do have some personal touches to that background. First of all, my dad worked his entire life for Leumi Bank. So
Wow.
I always told myself I will never work for a bank, and I still never worked for a bank. So, and I also worked for a startup here in Canada many years ago that we built some debit card solutions. So there were some relations there. That's where I learned everything I know about payment cards and the payment card industry, which is a slow industry. So I do remember that. That's what we were
I
trying
would
to
say
solve.
that
Hmm.
I think the industry itself is moving fast. There are a lot of changes. Many things are happening simultaneously. some of it is because there are a lot of fintechs targeting this space, but also due to the innovation of big companies. And I think what is slow in this industry, it's the ability of giants to adapt to the changes, right? So big companies or big ships are hard to steer, and it takes time until you turn the wheel left until you see the actual movement of the ship. And I think a startup, which is a tiny organization that it is able to move much faster than a big ship and trying to get the attention of the ship, that is the more challenging part. But I think the industry itself is changing rapidly all the time.
That's a good distinguish over there. And thinking about my introduction, you're right. Fintech is an amazing industry where there is a lot of innovation coming in. But the reason for that innovation for many people is because the big players do move slow. The big banks are moving slow. The big issuers are moving slow. Even though they are innovating, it's still that's what is creating that gap of how can we move it faster or innovate in it.
Yeah, and I think that to be on their side, or I was on their side, right? It's not because they're not smart or not agile. It's because there's tons of regulation. There are a legacy system that you have to deal with. But I think the idea of collaborating with fintechs as a tool to innovate is a great one, right? So it's like an iPhone hosting additional application or third party application and then making it to something which is much more sophisticated.
Right. So let's get into that because I first want you to explain to everyone what Hoox is all about. It's actually quite interesting platform. And with that, we can dive a bit deeper even into the type of regulations you have to do and all of those things because you still need to play in that big
Complex environment.
big environment. Exactly.
Well, Hooks is Hook's idea is quite simple. In simple words, it's just we make it easy for banks to engage with their customers at the point of purchase through embedded offers. That means that when you're about to purchase something, we provide the bank a tool, provide you with some kind of an incentive to use its card. Something like, pay with your TD Bank card or RBC card and get 5% off, or get free shipping, or get store credit. But the unique approach that we have is that instead of having that reward presented on the banking channel, which is not the place where you go to transact or purchase something, but actually at the point of purchase, and it can be online or in a physical store in a consumer facing screen. But when you do it in the right time at the right moment, that makes all the difference, and that provides both value to the end consumer because there's no friction and they receive the incentive they want at the time they need it, but also it gives the bank an efficient tool to engage effectively with the customer. So as an example, if you're not using the card that often and you use it as a secondary card, then our tool become the only efficient tool in terms of activation and change of behavior and leading to real top of wallet gradually.
hmm So it is integrated with the merchant or the issuer of the card system. Where exactly is it integrated?
So we start by working with the issuers, and we allow them to target their customers on our platform, and we don't need access to personally identifiable information, or PII as they say in the financial sector. We use a sophisticated hashing algorithm. So basically, instead of providing us with Moshe Mikanovsky email address or phone number, we would get a string which is meaningless to us and we are unable to decipher. But we use that string whenever we're trying to identify a real-time session with a merchant or someone that works with a merchant. So we our main preference is to work through merchants partners. It can be payment gateways or payment or e-commerce platforms or payment point of sale vendors. So we have a single integration play with them, and then we get access to multiple merchants. And the value for the merchant is that actually we bring third-party budgets or the issuer's budget, and we help the merchants close more sales. In e-commerce, we improve conversion. In physical stores, we can drive more loyalty. We can, as an example, provide store credit instead of an immediate discount. But the main idea is that the end consumer gets an incentive. The issuer is the main funder of the offer because he's the one trying to create a change or gain to the top of wallet position. And the merchant is a partner allowing this to happen on their assets, but through that gaining more sales and more loyalty with their customers.
Yeah, and you just highlighted over there also some of the complexities of this ecosystem, because they are the issuers, they're also the processors, of course, but that's all behind the scenes. So there are the issuers of the cards, the merchants that are accepting transactions, and then the consumers that just want to buy something and gain whatever discounts or whatever they can get from that. So if we are focusing on the consumer perspective, because most of us are consumers at the end of the day, what exactly is it that we're going to see that is a Hoox product in that buying experience?
So currently, when you would meet Hooks, you wouldn't even know that's Hooks behind it, right? It's like seeing an advertisement and wouldn't know which agency is the one promoting it. Maybe we'll put provided by Hooks at the bottom, but currently we're not even doing that. What you will see is that just during the purchase journey, you would see like a message that's embedded within the flow of the purchase that says, "Hey, if you use your X card, you're gonna get something." And you don't need to download any application. You don't need to register. If you decided to opt in, it's just by paying with the card. And if you would pay with the card, you would get the incentive that is promised. So it's like having an agent, like a secret agent within the purchase journey that just tap your shoulder and say, "Hey, do you remember that you have this card? If you use that this time, you're going to get something, so you should." And we're the agent, and currently we're doing this even without presenting our logo, right? Because the end consumers doesn't know who's Hooks. Maybe we just add noise to the process if we do it. They know who the bank is, and they are obviously interested in the purchase because they are now at the merchant store or online in the purchase journey. So they are familiar with both brands of the equation. We're just the agent that helps both issuer and merchant make a virtual handshake without sharing any personal data of the end consumer. So the merchant doesn't get any new data about the customer. The issuer doesn't get a new data about the purchase behavior. We're just allowing them to shake hands and provide a value to the end consumer.
Yeah. So you mentioned it before, but just to highlight that, it seems really smart that you move the incentives to get loyalties on the card, whether it is miles or cashback, at the end of purchasing. But you have to do the purchasing. You have to remember you had that card to do that, and now you move it towards the place where the consumer is before they consume it, and they don't even remember they had this card in their wallet. And now you remember, oh, you have that card. If you use it, this is the immediate gratification you're going to get, other than buying whatever you're buying.
I think that trying to forecast what the future will bring, which is a play for idiots, but I'll give it a try anyway. Uh, um, Cards used to be a very innovative tool, right? Look at 15 years ago, not everyone held cards, and the card share on the payment industry was much lower comparing to today. I remember the days when I had a credit card when you wouldn't use it on small ticket size transactions. It would be only if you wanted to buy something, because if it's $20, I can afford it. I don't need to use my credit card. And what card brands did smartly is that they taught us that there are many advantages of using the cards every day. But what happened is that because it became so popular and due to technological advances, in order to become a card issuer today, you don't have to run through long processes. You don't need to be a huge, giant financial organization. You can be two kids in a garage working with a digital payment processor, having some funds. You don't need a lot of funds, and then you can have your own brand and issue your own card. But all the technology is and the licenses are based on someone else's capabilities, right? Obviously, it's more expensive than having your own, but you don't have any infrastructure that you need to support it. And since that happened, and obviously I'm a bit exaggerating on how easy it is, but it is easy. Every merchant today can have its own co-brand. Um, what happened today is that people have more than one card, to say the least, right? The average American has between 3 to 5 cards. I met people with 15 cards because they say, okay, whenever I have a great welcome bonus, I take it. I take the full advantage of the card program and then I disappear. But this became a big issue for someone who's investing a lot of money in acquiring customers, in onboarding them, in having the risk underwriting, and also if you're still an active, not an active customer, but if you're still a registered customers in their books, and if you have 40% of your portfolio inactive, then it also becomes a risk, because if I'm not using your card and suddenly the financial the entire economy goes down and suddenly those portfolios starting to be active, that's not kind of active that you want to encourage, right? Because it's a distress usage and you are in the risk of defaults and bad customers in that way. So the idea is that in order to have an effective portfolio, you have to work it gradually to optimize it and make sure you can distinguish between a customer that can be active and should be active and a customer that won't be at any time. And think about this number that I just mentioned along the way. 42% of all cards in the US are inactive. They are not transacting even. If you look at underperforming sector, it's 60, 70%. It's absurd number, right? 40% of all cards in the US is 600 million cards. That means 600 millions account that someone make a ton of effort to onboard. It costs between $300 to $1,000 to acquire a new customer if you give them a welcome bonus, and having that asset dormant is a big thing, and Hoox is a very effective tool to solve that.
Okay, that's great. I could just try to think how many cards I have in my household. And you're right, it's probably more than 50% that are dormant and we're not using them. Because we did get them exactly for that reason, to get that initial discount for a first big purchase. And that was it.
But if you dive into the details, you'll see that customers are unable to optimize the spend, right? So if you have, let's assume you have 4 cards, it's impossible to memorize all the values that each card brings. So what customers are doing, they say, okay, let me simplify to myself. I have my primary card, which I'm going to use more often to everyday transaction. Then I have my Amazon card for Amazon and my Costco card for Costco. And then maybe some other random card that sometime I received for some reason, but I'm not using anymore. I don't know. I don't want to say a brand, a specific brand. Yeah. And then, if we can be a tool that can create the opportunity for customers to realize that there is a potential in cards that they are not using, and then we're not creating additional transactions to the ecosystem. But then if there's a blanket that currently goes in not optimal way to mainly a single player, now we are allowing underperforming accounts to take the blanket back towards their side, right? And have a spread more evenly, and more active customers accounts on all kinds of players.
Yeah. Okay, so let's talk about those challenges we started with. You mentioned that, or we mentioned that you moved countries while doing this. Now you are in Canada, and also working, in this industry that is fast moving, but the big players are slow moving. So how does all of that impact you as a founder of a startup?
So let's start. Originally I'm from Israel. You can hear with my accent, and I moved to Canada a little over a year ago, even before the mess started. So it wasn't from the wrong reasons. We moved because we just launched our beta in Israel, and Israel is a tiny market. It's not that it cannot be that significant for a company like Hooks.
It's like a small
And
city in the US.
yeah, and but it was great tool to first to validate some of the theories that we had. As an example, how effective it is when you're presenting uh, an offer at the point of purchase, and see how great the conversion is, but also how technically it works, and if it's scalable, and how complex it is to onboard a partner. But then we realized, or we knew in advance, that we have to focus on the US market, and it's challenging to do that remotely from a business development perspective due to the time zone. So at the beginning, before I moved, I used to have meetings in Israel because the pilot was still ongoing, and we talked to all kinds of players in the market. And then in the evening, from 4 to 11 p.m., I was having calls in the US with investors, with banks, with payment service providers. And even though you give it your best effort, when you're going online for a call at 9 p.m. and it's Zoom based, people can tell the difference, right? They see you are tired, your energies are not the same level when it's early morning. And also the potential of having a call later that day is impossible, right? So if they're on their afternoon, you're asleep. So I think from that perspective, the move was effectively from day one easier for me, because what happened is that early morning I used to I'm still having my calls with my Israeli co-founders and employees that are still based in Israel. And then I have all the from noon onwards the time to dedicate to the US. And from 7 p.m. there are no calls, no one, unless you're talking with different time zones. But in the East Coast, nobody will try to force a call at 8 p.m. Right? It usually never happens. So it became easier in that sense. But but you're gaining advantages on one sense. So we got closer to the market. It's easier to have conversation. You can board a plane 7 a.m. in Toronto and be in center of Manhattan at 9:30 in the morning for a day of meetings. But uh, I also got distance from one of my co-founders, who's the CTO of the company, who's managing the R&D team, some of the employees that are based in Israel. And it's always a challenge to keep it close, and have that effective brainstorming we used to have, or even having a meeting, and then when it's a face-to-face meeting, just after the meeting, having a break outside of the customer's venue, but digesting or processing the meeting and deciding what can be an effective next step. You can do that remote, but for me, I don't feel it's the same. And obviously we lose some of our capabilities. Even if I have an idea and I just want to knock on my co-founder's door, it's sometimes it's impossible, to say the least, when he's developing or writing a code is inaccessible when he's at home, right? So he's
Yeah, yeah. So there is definitely there are definitely the pros and cons of moving to another country, and there are reasons for that. I also loved how you mentioned in the beginning the initial stages of validation, where you do it in a condensed, localized manner to really validate that it's feasible to do what you want to do, and there is also a value there, and you're creating value to your partners and clients, etc. But then moving away, the fact that you're not there in person, so there is always those kind of tension. Where does it take you? And on top of that, you probably are now working even longer hours because now you are expected to be available for both markets or for both time zones. So that doesn't make it easier.
Yeah, I always feel like I'm not working hard enough.
Okay.
My wife always says you're always working. So there's a objectively with myself, there are so many things to do that
Mhm.
it's endless, right? It's
Yeah.
endless. It mainly is your decision when you're taking a break to be either with your family or do something for yourself.
Yeah.
But the amount of things to be done is endless, even if it means thinking about what to do next step and how to improve
Yeah.
what we
Yeah. I think a lot. I'm hearing that from a lot of founders that they have this internal voice telling them they're not doing enough. But if they're asking someone externally, they will tell them, "Yes, you are working too much."
Yeah, so
So it's,
that's cliche is correct for me as well.
mhm. Now let's talk a bit about the slow movement of the big giant in this industry. How does that impact your ability to grow in the rate that you want to grow?
I think, I knew in advance that a sales cycle in the financial industry is a long one, right? I used to sell products to banks, working for MasterCard. We had all kinds of products we were promoting for card issuers, for card acquirers. The average ranges between different countries, but it's around 12 months and north, right? So it can be a year and a half and sometimes even longer, depending on the type of product that you're trying to sell. So we knew that, and this is why part of what we did originally is design our product to be as minimal as possible in terms of requirements for IT. So we don't need any technical integration to core systems, which is a very complex task to have an R&D team of a bank having some space for a startup, unless it's cybersecurity, which can definitely change their the way they look at things. Uh, so we did our best to design it as easy as possible, and still, we're starting with the sales cycles with the business team, and the business team loves what we do. It's very promising, it's intriguing, it's innovative. I wouldn't say it's easy, but in many cases it's something that our hit ratio is huge. But then it's not the only one, right? That they need to have their IT look at what we do, if it's secure enough and if it's doable, and then their legal stuff to see if it's okay from regulatory perspective and if it's compliant with their privacy policy. And even though we believe that we did everything as easy as possible, for us, our sales cycles are again suffering from the same issue that any fintech suffers, right? They are long. And when you're building in startups, there are a lot of uncertainty. That you're always trying to doubt yourself. Maybe I should change something. Maybe we should remove that part because it's too complex. Maybe we should make it easier. Maybe it's the pricing. Maybe you don't know, right? So you're working constantly trying to get that real feedback, and the only real feedback which is honest is a signed contract. This is the only real feedback that you can have, and since it takes long cycles to have a signed contract, it makes this task of reiterating a bit more complex for us. You have to be focused on the vision. In that sense, you have to know what you're doing and believe in it and understand why it's important, but you also have to keep a flexible approach and think constantly on how to reduce friction and make it easier. And we're still doing that every day.
Yeah, it reminds me of a very similar product, but in the loyalty industry that I was building in the past. And we also, one of the strategies was to make it as simple as possible to the partners on the other end. We call them partners, but the partner is the client or whatever it is. But then this also create for you a higher need to be compliant with all the different regulations out there, and security compliancy and privacy compliancy. And I've seen that you are actually already enterprise grade with ISO and SOC and GDRP and the California Privacy Rights Act. So you had to go through that route where many startups, it takes them time until they get there because they're not in such a highly regulated industries.
Yeah, for startups. Those all of these acronyms are usually a matter of time and money, and right. It's the attention that you have to put into this, and some funds, because usually there's some kind of a certifier that that you have to pay to, and a consultancy firm that guides you through the process. But it's not as complex for let's assume for a big financial institution to become PCI compliant, right? So for a bank to become PCI compliant, that can be a project of 2 years. For us doing that, it's a matter of a month or two, but it will be spending the funds and having enough attention to it to do it right. But we waited with this as long as we could. For the POC in Israel, as an example, no one asked for this. We went through an internal due diligence by the IT department to make sure it's relevant with the legal team, but no one asked for a SOC 2 or for ISO. Um, First customer in the US, we received the MSA. In the MSA, you have to have everything, including an insurance for the company, right? In some cases, they ask for an American entity, which is another thing that we were going through, right? Or we were establishing an American entity, and we're flipping it to become the mother company of the Israeli one. Uh, so, so becoming enterprise readiness, it's not just how the technology is built, is also to have the trust of the big partners, that you see that that they can see that you're serious enough in what you're doing, and that that you're following the protocols.
Yeah. Listen, you make it sound easy, but I know it's not easy. I've been there, and I know that these things do take time and money, like you said. But it's also prioritization, like where are the priorities and the directions and the strategies. So all of those things are going into those decisions. And many startups, either they try not to make those decisions or they are afraid of getting there. So it's good to hear that it sounds easy, but
It's it's like saying that the giving birth is easy, right? It's basically something that I have to give a big shout out to my co-founders, because they did most of the heavy lifting, at least
Mhm.
in these sections, and they did it in a way that looked easy for me. And I hope that they won't hate me for saying this, but they,
Mhm.
they did an amazing job.
Yeah. And we definitely, as two men here, we cannot say anything about giving birth. So we're here for our wives that did that hard work. So let's move a bit into your founder journey. So you told us a lot about your background and how the problem that you're solving actually came from that background that you had, as well as your personal move and the challenges and some of the benefits with that. Um, what Tell us a bit about more about you as a founder, and how did you deal with those challenges? And I'm sure there is still an ongoing thing, like you also said, you feel you don't work enough. What can you tell us about that to help other founders in your situation?
That's a great and a big question. I think the biggest thing that at the beginning of the journey I had the most difficulties to cope with was the uncertainty. When you work with a corporate, and especially after a few years, when you feel comfortable in your position and you feel valued, and the paycheck is satisfying, um, there's a sense of comfort zone, right? When you leave that out to the wild and starting your own company, all of this disappears, right? You don't have your steady, nice paycheck. You have to work a lot before you can get the attention of investors, and even then, the paycheck usually of early stage founders are far from what they could have earned in a similar corporate job. And there's a big question mark upon what you do, and you know that in advance when you start, the likelihood of succeeding is, I don't know what, 5%. And then, as time goes by, you hope that you improve your odds. And luckily for us, we always feel that we're getting closer and closer to to the bullseye. But I think for me that was the hardest part, just to feel more comfortable with uncertainty, to feel okay that I don't know if within the next year I would still live in Canada or I'll move to New York. And I don't know how big of a success this is going to be, and or if we'll still be trying to perfect our value proposition. So that type of questions I feel more comfortable today, and even when I feel uncomfortable, I developed some kind of mechanism to calm myself down, either by focusing on a project or focusing at now, what I have now, how to look at, at the current present. It sounds uh, Buddhist in a sense, but I really think that it has something to it, right? If you're focusing on on what your status at this point without knowing what the next 6 months will look like, I think that was the most challenging part for me. And at one point you can even enjoy that, right? So it's I don't know if it's a sadistic part, but there's something exciting to it also, right? It's like riding a roller coaster, and you feel alive, and when you have a eureka moment for something that you've been so obsessed with, and there's an evolution to it. These moments are priceless in a sense.
Yeah, and it is like a roller coaster. So there are those peaks and valleys, and many times it's a lot of valleys that you have to create momentum or keep the momentum to get back on the top. One thing that I also want to mention over here is how we met, because one of the things you have done when you moved to Canada, you reached out to the community and you created. You saw what available in the local community, what help can you get, and that's how we met at the Toronto Business Development Center, and where Oz actually won a second prize for your pitch over there. So that was great. I love that. um, and you didn't like stayed in your bubble, working from home and stuff like that. You went out there because that's really important to get the whatever community you can get to help you, whatever resources you have, whatever connections you have, whatever it is.
Definitely, I think again, like I don't want to sound repeating myself, but I'm not doing this enough. But at least in terms of programs like TBDC, but to put yourself out there, there's no really other choice. The only way to promote the company or a company like Hoox, I don't want to talk on behalf of all companies, but company like Hoox is by meeting smart people, sometimes good people that are simply willing to help, even without anything that really benefits them. It's just they've been through this journey, they've made their way, they feel secure enough, and they just want to contribute. And there are a lot of these kind of people. There are the others as well who want to take advantage of your journey, right? But I think there are many good people that can be tremendous help, and you can never know. There were cases that I went for a meeting that I booked with someone, and I didn't know in advance what would be the nature of the meeting, but I decided to book it. And then when the day came and I needed to take a drive, to meet, I said, why did I book it? Right? I don't have time for it. It will be a waste of time. And then I went for the meeting, and something completely blew my mind. And I have few examples of this. Some of it, this is part of the way how we met some of our backers, some of our supporters, our advisors, and even Roy Pellet, who's the third co-founder who joined myself and Guy Friedman. We met in such a way. A friend said, "You know what? I have a friend. You should meet him. He's from the gift card industry. He's a smart guy. I know him from my time, in whatever, and you should meet him." And we met and we clicked, and after several meetings we became partners, and without him we wouldn't be at this point that we are today. So I think it's all about meeting people like you, Moshe, and who knows what this podcast will bring for us.
Exactly. I always do that, openness to the world to see where, uh, where can I learn new things. That's my approach, and I never know who I can learn from. So you can learn from anyone. So this is why networking and especially for founders, and especially when you're moving to a new place, it's so important.
There's a podcast I really like. It's called the Tim Ferriss Show. It's one of the most famous podcasters. But I think what I really like about him is that even though he's a bright guy, very smart, he's constantly learning. You can hear during the podcast, during his interviews, that his thirst for learning is still there. He still has questions for himself, for the way he plans his day, for the way he take breaks, and I think that's inspiring, and I think that's a way of life, right? It's a never ending journey, right, of learning, and otherwise it will be boring.
Absolutely. So with that note, my last question for you is: we can share, your contact information with the podcast information. If people connect with you, what is it that you would like them to connect you for, or what is your ask?
Well, if focusing on Hoox, our ask is to onboard more customers. So if you're a card issuer that suffers from inactivation or underperforming accounts, we're the one that can make a difference. Or if you work with merchants and provide them the software for payment processing, we can be a great tool to monetize the traffic that you have, or for merchants to increase volume. So anyone who's relevant, happy to have a discussion.
Amazing. Thank you so much, Oz. This was great. I really learned a lot from you today, and I really kudos for you for the journey that you're taking, because I know it's not an easy journey. And all the best and luck with Hooks.
Thank you, Moshe. I had a great pleasure, and thank you for having us.
My pleasure. So thank you everyone for listening or watching us. My name is Moshe, and this is the Beyond Product podcast. See you again.